10 takeaways from the GST Council's 32nd meeting. In this video, you will know the exclusive 10 things you should remember about this meeting. The all-powerful GST Council met on the 32nd meeting, that is 10th of January 2019 in New Delhi. It has taken some groundbreaking but belated decisions which is mainly focused on helping MSME sector, that is the micro, small and medium enterprises sector. This meeting is the first meeting in 2019 and also this will be the last meeting before the budget, which is on 1st February 2019. The MSME sector is the biggest beneficiary from this meeting. This shows that the government wants to really help the MSME sector and make sure that India is a strong economy, because for any economy, MSME sector should be very strong. That is why in the GST Council meeting, it was focused mainly on MSME sector. The Council has proposed many reliefs and benefits for MSME sector, like for example, widening the scope of composition scheme for MSMEs, simplification of the compliances, which was a very big problem for most of the small traders and small businesses. Now they also have a free accounting software and so on. These changes will come from 1st April 2019. Now, let us take a look at the 10 takeaways from this meeting. The first point, GST registration threshold limit. The threshold limit of 20 lakhs now will be 40 lakhs. This is a very big relief and small businesses, small traders will not need GST registration because now 40 lakhs is a pretty big number. 20 lakhs most of them used to do, but now because of this change, it is a very welcome relief for MSME and small businesses. Also, MSMEs engaged in supply of goods get relaxation from GST registration. This is a New Year gift to all the MSMEs. Further, the Council has given choice to the states to choose the applicable threshold limit from 20 lakhs to 40 lakhs. Now the states have to take a decision within 1 week and no relaxation has been given to supplier of services. The second takeaway from this meeting is free accounting software. The GSTN will provide free accounting cum billing software to small taxpayers because this was a very big cost for them and also a very big headache. This is a very welcome relief and it is going to save a lot of money and time for the small taxpayers. The third takeaway, composition scheme. The limit of the annual turnover in preceding financial year for availing composition scheme has been increased from 1 crore to 1.5 crore. And for special category states, the Council has given liberty to the states to decide independently about the threshold limit within 1 week. The fourth takeaway from the meeting is that compliance by composite suppliers. Right now, composition suppliers are required to file GSTR4 on quarterly basis, that is once in every 3 months. The Council has now proposed to simplify the compliance procedure for such suppliers. The supplier shall now be required to file just one return on an annual basis. The payment of tax shall be on quarterly basis. The fifth takeaway, composition scheme for supplier of services. For the very first time, the option to avail composition scheme has been given even to the service providers, and this is for people who have turnover up to 50 lakhs during the previous financial year. This is a very good move, and under this scheme, the service providers will be liable to pay GST at 6%, that is 3% CGST and 3% SGST, and the scheme shall be applicable to both service providers as well as suppliers of goods and services. Also, the Council has asked the group of ministers to evaluate the proposal for extending the composition scheme even to real estate sector so as to give a big boost to residential housing segment, because India has a goal by 75 years of independence, they want housing for all. So to support this, they are proposing this and the Council of Ministers will give their feedback. The sixth takeaway is a new cess at the rate of 1% shall be on intra-state supply of goods and services within the state of Kerala for a period of 2 years, and this is because of the Kerala floods which we saw, and to support that, this disaster cess can be levied in Kerala for intra-state supply of goods and services. The seventh takeaway is opt-up or opt-down concept. Now, there would be two thresholds, that is 40 lakhs and 20 lakhs, for exemption from registration and payment of GST for suppliers of goods, with the facility that one can opt up or opt down depending on the revenue. And this is also a very good flexible move which will help lot of people. The eighth takeaway is exemption limit will apply to intrastate sales only. The increased exemption limit, which is 40 lakhs, is applicable for those businesses who deal in goods and also do intrastate trade, and not for those who do interstate transactions. So this will not apply to interstate but only for intrastate transaction. The ninth takeaway is some statistics. 13.35 lakhs is the existing composition taxpayers getting relief. 1,725 crores is the revenue foregone from composition taxpayers. 20.64 lakhs is the total number of taxpayers getting relief, and 5,225 crores is the total revenue loss to the exchequer. The 10th takeaway is relating to ease of doing business. The proposed exemption limit for MSMEs with annual turnover of up to 40 lakhs will benefit lakhs of traders and help in improving the ease of doing business in the very near future. Also, it will lower the cost of products and improve the competitiveness of the SMEs, which is a welcome relief and very much required for India to grow further. So these were the 10 takeaways from the GST Council's 32nd meeting. If you liked this was mainly because of the research of Prabhakar KS, Proprietor of Shree Tax Chambers. He is an expert on domestic and international taxation. His articles have a worldwide reach and appreciation is coming from across the globe for his research and articles. We thank Prabhakar KS for his selfless effort on researching and giving this content, and for more such videos, please do subscribe to Excel Academy, your one-stop solution for CS course.